Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, September 21st, 2006. And I've got the Nasdaq 100 on the screen right here, the QQQQ that we're looking at on a daily time frame. And today we had a down day. Apparently, we had a little bit of news from the Philly Fed that seemed to have spooked people. And I think it's just more indicative of the action that we're going to see around this area near this 200-day moving average, that we're going to see some more back and forth type action. And it really shouldn't come as a surprise that we're seeing a little bit of a pullback here after such a good rally and good news coming out, yesterday, that is, with the Fed holding off on any further rate increases. So, yesterday I said I was cautiously bullish and that we're going to need to see yesterday's Fed announcement digested for a couple days. That's usually a trend, that it takes a couple days to really kind of work its way into the market and really see how the market handles that new bit of information. And on the weekly time frame, again, I'm going to reference here because we continue to be in this important area, and this is where I get my bigger picture theme that we're probably due for a little bit of sideways action until we get some more definitive trend, because we've got this important level here from the prior the highs back in late 2004, support in late 2005, early '06, and we've rallied, very nicely up to that level from about the 35 level up to 40. So, as far as this time frame goes, we're at, the weekly time frame. It looks like we're at an important area where there ought to be at least some consolidation underneath these levels, if not turn lower altogether, which is not confirmed yet on the daily time frame. It's still going to take a lot more sideways to negative activity before we see confirmation on the daily time frame that it looks like the sellers are starting to regain control. However, on the 10-minute time frame, we did see today higher highs, but we also saw lower lows. So now we've got looking a lot more consolidative action in here. And again, I'm going to point out to the semiconductors, because the semiconductors yesterday were the one group that failed to make it past this prior level of support from last week. And I said that, gave me reason for concern in here, that it was unable to overcome that on a closing basis, as well as finding resistance near that declining 5-day moving average. And I suggested that, further weakness would come if we saw yesterday afternoon's lows taken out, that we would expect to move down at least towards 33.50. We came down to 33.47. So again, this negativity in the market today shouldn't have come as much as of a surprise, based on the semiconductors being a leading group. And we can see here on the 5-minute time frame, was it just nice lower highs and lower lows in here. As far as looking at the daily time frame, we did have one attempted recovery here. After the initial test of S2, the market rallied back up above the daily VWAP, and then that S2 failed to hold as support. In fact, became resistance, and we saw continued sell-off right into the end of the day. So where that leaves us for now is still cautiously optimistic. It's going to take a move and a close below this level here, about 32.5, for me to really get concerned about this market. But right now, we've still got the definition of an uptrend, higher highs and higher lows on this time frame. On the 10-minute time frame, well, we've got a lower highs and lower lows. And on the weekly time frame, we've got kind of a mess in here. We've got this prior level of support as well, the 2/3 retracement, and I can go on here. But bottom line is, we remain in an environment where it pays to be very cautious right now. The SPY, the S&P 500, didn't make a higher high. It didn't get past the little peak from yesterday afternoon. Let's take a look at a 2-minute time frame. We can see that a little bit more clearly. This was yesterday afternoon's high. It didn't make it above there, and it didn't make a new high for the year like a lot of people were hoping and expecting. I've been saying that if it does make a new high, I expect it's probably a better opportunity to sell rather than buy, because we've had this, this rally off of this inverted head and shoulders pattern we identified a couple months ago, and it's starting to get into the area where it makes sense to take profits, not to be doing new buying here. It's we've got an extended market, we've still got an uptrend, And on a 10-minute time frame, we can say now that the market has made a lower low. It broke below yesterday's low and has given up all those gains from yesterday's gap as well. So we've got a lot of people trapped in here based on the buyers after the Federal Reserve failed to take action yesterday. And that could make things a little bit troublesome going forward. I think initially we're going to look for a little bit of support down near 131. And if that level gets taken out, then we're going to be in for a little bit more serious sell-off. Looking at the daily time frame, that would put us with a lower low. So hopefully, at least on a closing basis tomorrow for the week, we can hold above that and prolong or delay any further damage from this point. The IWM Russell 2000 is still unable to make it past this high over here. Doesn't look horrible, just a normal pullback for now. But we have to keep an eye on the MDY because this is the one area that concerns me most. The mid cap spiders MDY have been making these. It broke this trend line. However, it didn't break to a lower low right in here. And that's really, trend line breaks don't break the trend. Making a lower low does. Now I think getting below and closing below 135 than the mid caps could be the catalyst for a more serious market decline. We have to be very careful here. I can't stress it enough. It doesn't mean I'm not going to continue to look for ideas on the long side because there's still good ideas working on the long side. Let's go ahead and take a look at some of the stocks that I've been mentioning here the last few days. Let's first take a look at this RFIL, which had broken out on real big volume. It's pulled back to the 10-day moving average. But you know what? The volume is just so light in here. The average daily volume is 173,000 shares. It only traded 94,000 shares today. I think that's just too low volume for me to really continue to comment on the stock. I wanted to see it get above 8 today for a purchase. That didn't occur. I'm still going to watch this stock personally, but I think it's just too low volume for me to really make any recommendations in here because I think it might impact the stock, and I don't want to see that happen. So I'll probably be trading it. If you're interested in the stock, then you're going to be on your own. ANGN, Angeion. This was a stock that I had suggested that we probably should have been in based on yesterday afternoon strength. Realistically, it didn't make a higher high at 760, which it should have, and I suggested a stop below $7 a share. And so based on that, we got stopped out of the stock. I'm going to continue to watch it. I still think that there should be some follow-through to this recent activity in ANGN. And perhaps it's going to need to take out these highs and see that flat 5-day moving average flatten out before it really can get moving to the upside. But officially stopped out of it. HPOL, Harris Poll yesterday had suggested buying at $6.20, I believe. I said set your stop at 6 and a dime, so we lost about 10 cents a share on HPOL. And China, CDC Corp, symbol China. As I'd mentioned yesterday, I'd gotten in on some of this strength. I sold out of my position today on the strength when it got above 6, just because the overall market was starting to weaken, and I wanted to take profits on the long side when I could. What I'd suggested here for a purchase today was a pullback to 574. Obviously, that never occurred, so really there was no official trade in there. As I'd mentioned, I had got long it, but there wasn't an opportunity realistically to make a good low-risk purchase in China Corp. Charter, CHTR, and this stock, still looks good. I didn't purchase the stock. I just, it's too low range for me. And unless I saw a lot of volume coming into it and it looked like it was going to break out, then I might have gotten involved. But I suggested buying the stock at 153. You had plenty of opportunity to buy it at 153 today, and the stop I would say remains at $1.48. So. I don't like to see that big volume coming in at the end of the day, but maybe it's just a little shakeout. I think it's got to get above, 155 now for the momentum really to come back into it. But it still, it still looks good on a technical basis here. So no reason to run for the exit yet if you are in it. Dollar Tree, symbol DLTR. This is the one that made that nice weekly breakout on the daily time frame. I thought it got a little bit extended yesterday, and what I was looking for in Dollar Tree was a pullback to $30.90. Obviously, that pullback to 30.90 came, but then we were going to buy it on strength above 31 once it pulled back. This is why I think it's foolish to buy stocks that are, in a downtrend, even for a 10-minute time frame. I don't believe in buying weakness. I believe in buying strength after a period of weakness. Let the specialists, let the market makers buy weakness. Let them sell strength. Let them sell into these, big rallies like this. To me, it's a very dangerous game, and there's two types of risk in the market: price and time. And when the price is going against us, there's no point, and markets usually need time to correct before they can move higher. So by waiting for the momentum to re-enter the stock, we avoid getting involved, and there's no reason to be involved in the stock. So on to the next one, which was UTSI, and UTSI had suggested buying above 912. I got involved here, and I got stopped out as well. So small loss taken in UTSI. But it just doesn't look like the time is right for this stock right now. So on to bigger and better things, hopefully. Cameco, symbol CCJ. This stock I had suggested as a short. We first wanted to see it rally up to 39. It did get that rally to 39 and then sell it below $38.49. We did see that occur as well. So it first rallied to there and then took out this low from yesterday right in here, which is where I wanted to sell the stock short. And I'd suggested a stop at 39.05. I still believe that that's a good place for the stop, 39.05. And it just, it made a couple sharp spikes higher, probably because it's a listed stock and the specialist was trying to pull stops before they drop this thing lower. But it's looking pretty good as far as a short sale goes, I think. The 5-day moving average started declining again, and it looks like it's sitting here on the edge of a cliff, but if not, we've got a stop in place. So let's see what happens. STLD, Steel Dynamics. This one broke down beautifully today. Unfortunately, what I was looking for was a rally first up to 51.80. Today's high was 51.74, I think. That didn't prevent me from getting involved in the stock. I got involved short right here. I'm sorry, no, that's not true. I got involved up in here about as it started coming back down, and I covered down near S2 because, first of all, the target was $49.50 to $50. Officially, there was no play in it. Hopefully, some of you were able to participate because, like I said, it was just a real beautiful downward move, and that's exactly what a downtrending stock is supposed to do. It continues lower. To me, it's just too bad they can't all be like this stock, MNCS, Manchester Incorporated. What a crazy looking chart this is. Here's a case for buy and hold, I guess. I have no idea what these guys do, but look at this stock in here. Just amazing how many days in a row this thing can go up. Anyways, there is risk in stock. They're not all going to move up like that. These are just opinions. You've got to, decide based on your own parameters whether or not you want to get involved in the trades. My name again is Brian Shannon. Thanks for listening. I'll be back this evening with another video with ideas that can hopefully help us make some money for tomorrow.